Okay, welcome to today's Sovryn Tea, everyone. Thank you for joining us. My name is Magnus, and today at Sovryn, we're joined by Mark Moss, Alex Svetski, and EdanYago for a fascinating Twitter discourse. Ladies and gentlemen, don't forget that Twitter Spaces are interactives. We will be taking questions at the end. So stick around if you want to ask us anything. For background, everyone, Mark Moss is an author, financial educator, and host of the Mark Moss Show on iHeartRadio and YouTube. Mark describes himself as a freedom maximalist and helps listeners navigate cryptocurrency, business, and financial sovereignty. Welcome, Mark. And it looks like he was taken off as a speaker, so I'm just going to invite him again. All right, next is EdanYago. He's our in-house guest. He's a Bitcoin OG and an early contributor to the Sovryn protocol. Yago has been in the space since 2011 and has founded multiple Bitcoin-focused companies. He believes that Sovryn plays a crucial part in creating a world built on Bitcoin. Welcome, Yago.
Hello, everyone. Nice to be here.
Great. And also we have Alex Svetski. He's an outspoken Bitcoin advocate and author who's host of the Wake Up podcast. He's also founder of the Bitcoin accumulation app, Amber. Welcome, Alex.
What's up, gentlemen? Thank you for having me on.
Awesome. And all right, so we have Mark. I don't know if you can hear me, but I've just invited you to speak. Let me know if you don't get that invitation. But before we get into questions, everyone, let's start with a little icebreaker, a Bitcoin joke. Are you ready? Okay. Why do Bitcoin investors want a Lambo? Because they know Ferrari is owned by Fiat. Thank you. Thank you. Don't laugh at once, everyone. Don't laugh all at once. But if you don't like that one, I got one more for you. What's the difference between Bitcoin and my wife? My wife doesn't go down on me. Thank you. Thank you. Let's move right into it, guys. So the title of the space is called Bitcoin Revolution, How to Become Financially Sovereign. Let's delve right into this. Mark, I see you've posted a lot of content recently about the importance of self-sovereignty on our money and of self-custody. Can you walk us through your message on this?
Yeah, sure. I just gave a talk last weekend on one called Bitcoin, Come and Take It. And basically in this, I kind of addressed a couple of things. And so one is that one of the main things I hear from people, no coiners, if you will, I get like 5,000 comments a week across my platforms, is like, what if the government makes it illegal? And that's it's a valid question, I suppose. But one, it starts with that you're already a victim, right? So I'm helpless. I can't do anything. If they want to make it illegal, then it's all over, right? So I reject that framing right off the bat. But a couple other things. I made a case that, one, yes, they will come after custody. I believe that's probably the biggest attack vector that we have. We're already seeing that happen in the EU. They're moving towards that. I was thinking that maybe in this executive order that came out today, we'd see some talk about that. It seemed to kind of have not a lot of teeth. But they're going to come after custody. A couple things about that is one, an attack on custody, meaning how ridiculous this is, how ridiculous that you don't have the right to hold your own property in a way that can't be seized or stolen from you. I mean, just the framing of that, when you actually think about it like that, is completely absurd and ridiculous, and everybody should reject that instead of being a victim. Like, what if they do? It's like, hell no, they're not going to do that. And then I also made the case that this is actually pretty new. So an attack on us being able to hold our property, for us not to be able to hold our own wealth is something new. For all of history, we've had our own money. So whether that was rock, shells, seashells, gold, we were able to hold that money and transact as we see fit. It wasn't really until 1933 when they seized the gold that attack started happening. Then we had the Bank Secrecy Act in the 70s. Where they made it where you can't transact more than 10,000 US dollars without filing reports, which was an attack on that custody and that privacy. Now, at the time when that was passed, $10,000 was worth about $80,000 of purchasing power today. So it was a much higher dollar amount than what we have today at 10,000. And then where it really went into overdrive, it was in 2001 at the great at 9/11, and basically it was through the Patriot Act is where they passed all types of laws against being able to, we got to fight terrorism, right? Terrorism's a bad thing. Nobody wants that. And so that's really where this has started. And so it's a new problem. It's like the last 20 years. And so we should just stand up. We should reject it. Of course, it's come front and center stage through what's happened in Canada. We found that even supporting something that was constitutionally protected, like freedom to assemble, how that became criminalized and how even transacting, even sending them $50 could have got you in trouble. And of course, well, shoot, I guess the governments are going to go after people that would want to stand up against them. But then we saw in Russia, one of 3 global superpowers with nuclear weapons got their bank accounts frozen and seized. And so if it can happen to people in Canada, if it can happen to people or nations like Russia, then it can happen to everybody. And it really emphasizes the need to do that. One thing I heard at this conference, we were at Unconfiscatable last weekend, NVK said, Bitcoin is the only property you can hold without violence. And so what does that mean? Well, Jason Lowry has been making a lot of comments lately about your property is only yours insofar as you can defend it. And really, it's the oldest problem that mankind has had since day one. How do I protect my property without it being stolen from me? And so Bitcoin solves that. Bitcoin solves the oldest problem in humanity. And like Jason Lowry says, it's only yours insofar you can defend it. Well, Bitcoin doesn't need any type of money or system to defend it. We can just do that cryptographically. So I guess that kind of frames up my views. I guess the last thing I would say, and then I'll turn it over, is that the reason why this is more important than most people think it is, or maybe as important as people think it is that because without the freedom to transact, we have no freedom at all. Our property is an extension of our life. We've expended our life's energy to acquire that property. That property is like our life's battery. It allows us to continue to live without having to continue to work. And we need to have the freedom to have that property, but to transact with that property, we have no freedom. So I have the freedom of speech, but if I can't afford a phone to get on this call, or I can't afford a computer to post online or to print a pamphlet, do I really have freedom of speech? I have a freedom to assemble, but if I don't have the freedom to pay to put gas in my tank to drive to that assembly or a hotel room or food while I'm there, I don't have the right to assemble. I have the freedom of religion specifically guaranteed by the Constitution, but if that church can't pay for a building, if we can't pay people for that, then there is no freedom. And so this is the most important thing. It sits at the base of all of our rights. This attack on it is a new thing, and like I said, come and take it.
Yeah. I would just add one thing to that. I think Mark summed it up really great, which is my response to the question of what if the government makes it illegal. Well, every single other form of property exists only because the government makes it legal. And so it's up to the whim of government. Those forms of property exist only at the pleasure of government, whereas Bitcoin is the only form of property which is legal, which exists at all, regardless of what government thinks. Magnus, have we lost you? Guys, it looks like we may have lost our host. So maybe, given that's the case, Alex, you recently wrote, I think, an article, The Rise of the Individual, the Fall of the State, which I think follows on a little bit of what we were talking about. How do you see sort of the individual being able to carve out sovereignty for themselves in this world?
Two things, guys, quickly. One is, yes, I did write that. That was like 3 years ago, so it was an interesting piece at the time. But number two is my internet just fucking went out, so I'm on data. I might have to leave you guys for 5-10 minutes until I sort this out because the power went out in the apartment. So I'll be back.
All right, thanks, Alex. Samson, you just recently joined us. Hey, how are you doing?
Hey, Yago. I'm doing good. How are you?
I'm doing well. It's kind of crazy that this is maybe the most exciting time in Bitcoin in all of the years that we've been in Bitcoin.
Yeah.
Speaking of which, you recently decided to head out on a new adventure. I'm very curious to hear a little bit about that.
Yeah, so I spent about 5 years at Blockstream, and I thought the next thing should be nation-state Bitcoin adoption. If you look at the trajectory of where things are going, I think Blockstream laid a lot of important foundational pieces down. I joined towards the tail end or after the scaling wars, and we saw a number of attack vectors on Bitcoin. So, the mining overconcentration in China and a number of other things like lack of privacy. And I think during my tenure at Blockstream, we kind of focused on fixing a lot of those things. Even projects like the Blockstream satellite, which would ensure connectivity to the Bitcoin network if internet is cut off in a country. So given that there is this strong foundation now at Blockstream, I figured with opportunities presented to me now, it would be an opportune time to pivot a bit and focus more on what the next threats would be. And I think some of those next threats are going to be nation-state level attacks. And we kind of saw a small one in the sense of China banning mining. So it was good that there was a large exodus of miners even before the ban hit so that the network was running smoothly. But I think some of those things that Mark was talking about, the attacks on money, the attacks on sound money, and coming restrictions on the ability to transact, they're going to escalate. And that largely has to do with fear and fear-mongering and trying to elicit that fear in the general population. And that will allow people to exert new types of controls on money and transactions. And I think the way to get around that, to prevent it, is to encourage more nation-state adoption. So it's sort of a race to see which one wins out. There's multiple forces at play here. One is Bitcoin adoption, because Bitcoin is needed. People are seeing the utility of Bitcoin and understanding that Bitcoin is money for enemies. But at the same time, you're going to see the other end of the spectrum, which is trying to control Bitcoin, to control movement of money, to track and surveil all of these things. And I think fighting this fight now is an important one. So getting more countries to adopt Bitcoin, making it legal tender, having nation-state Bitcoin mining, those are things that can preempt some of those attacks in the future.
So Samson, how are you thinking of going about doing that? How are you going to work to lobby governments in this way?
I'm really just working with groups on the ground in the different countries and giving advice as I can. I'm not directly reaching out and engaging with governments. It's more about people on the ground that have interactions or have connections to the governments that I'm working through. So at least that's my strategy for now, because there has been a lot of inbound. And after I announced that I was leaving Blockstream to focus on this, there's been even more. So I think I have enough on my plate for the time being, and maybe in a couple of years I'll need to work on some outreach campaigns. But for now, it's more about processing and managing inbound.
Well, that's good. It's always better to have the ability to do inbound rather than outbound. Maybe just on this point, I have one more question, and then we'll see where the conversation goes. But you were very involved in the upcoming bond offering in El Salvador. So I think I'd be curious, and I suspect that a lot of people on the call would be curious to hear sort of like the behind-the-scenes story of how that came about. And what you think is going to be happening with this bond offering.
Sure. So it seems like it's running behind schedule. The backstory of this was we were introduced to the government of El Salvador and a number of the president's advisors through Jack Mallers when he was kicking off the Bitcoin law with Bitcoin Beach. And throughout the course of those discussions, we were advising on things like Bitcoin custody, Bitcoin wallets, and we proposed doing a Bitcoin bond because at the time there's this meme circulating about volcano bonds, and we thought this could be done on the Liquid network. And because Liquid does have the tech to do securities and the like on this publicly accessible chain, it could be an interesting thing to do. So we kind of roughed out a proposal on what these bonds could look like, how it could be structured to use mining. And we presented two scenarios. One was the bonds in the current state that people know them. The other proposal was future flow of mining revenue, so sort of like a mining entity that would mine and share profits with the holders of the security. And we were also asked to model out just a traditional bond that was tokenized on Liquid that did not have any Bitcoin backing or mining component. So we kind of modeled out those three things, and then the Minister of Finance decided to, and I guess the President decided to go with Proposal 1, which was the current form. So it's a 10-year bond with a 6.5% coupon, backed with 50% of Bitcoin. So it's $1 billion capital raise, and then half of it would just go to buy Bitcoin and hold it for 10 years. And then the other half of the bond would go towards Bitcoin mining, so energy infrastructure plus Bitcoin mining. And that would potentially help them pay those 6.5% coupons every year. And at the end of the 10 years, you get back to principal. But there's one interesting twist to the bond, which is after 5 years, El Salvador will be able to start selling off some of those Bitcoin holdings, the initial $500 million purchase. And then once they recoup the 500 million, they will share part of the bond upside with the holders. So your coupon will be 6.5% as a base plus whatever upside there is. And to do this, they're passing some new laws, digital securities laws in El Salvador, but those have not hit Congress yet. I believe they're ready, but they haven't gone to Congress. But I think probably in the next week or two it should go, and then we'll find out when the bond offering will happen. But it's largely dependent on LaHeo, which is the issuer of the bond. That's the geothermal plant in El Salvador.
So I've heard different versions of how much interest there is in the bond offering. I've heard that there's been subscriptions for 500 million. I've heard that there's oversubscription for $1 billion. Can you shed any insider info, some alpha on that?
Well, I think there's a lot of numbers out there and a lot of people talking about it. So I've seen the same things, but I think it's more an expression of interest, and maybe people hear different things about who's interested to buy how much, and they're just adding those up. But right now there is no offering yet, so it's all verbal and expressions of interest at this point, I believe.
Cool, awesome. I see Mike G has requested to speak. Mike G will be opening the floor up in some minutes. We're going to be talking a little bit with our invited speakers first. Anyone else who wants to ask a question or participate, you guys can also kind of queue up by requesting to be a speaker. Mark, I've been watching some of your videos, and one of the things that you seem to be focused on, which is kind of unique because I haven't seen a lot of people talking about it, is how to sort of earn passive income on your Bitcoin, or how you can get more effectively leverage out of your Bitcoin. And one of the things that I think I've seen you talk about is combining Bitcoin investment with real estate. And the other thing is using Bitcoin lending services. And so I'm curious, first with regards to the real estate and just like any other asset types, especially since we were just talking about bonds, what are some of the ways that you think are most interesting and that maybe most people haven't thought about how they can sort of gain economic benefit from their Bitcoin besides just hodling it?
Yeah, sure. I learned something a long time ago, and it was a strategy. You've all heard the velocity of money, which measures how fast a dollar moves through the economy. I pay the guy at the hotel. He takes that $20 and goes and buys food. The guy takes that $20 and goes to the mechanic. And so that $20 moves through, 3 or 4 things in the economy. I've looked at it the same way, but like I look at the velocity of money in my investments. So can I get $1 to do 2 jobs or 3 jobs or 10 jobs kind of a thing? And so the more jobs that dollar can be doing for me, effectively the faster I could leverage up and get more, grow my investments. And so, it's you can do it simply, or you can kind of do it more advanced. Now, I will say right off the bat, like I'm not a fan of earning yield on my Bitcoin. So I don't loan my Bitcoin out on platforms like Coinbase or Celsius or any of those things. I don't do that. To me, it's the wrong way. So I don't want to risk 100% of my Bitcoin for whatever, 4, 5, 6%. I like asymmetric yields the opposite way. So I'm not a fan of doing that per se, but as a long-term hodler, I mean, I started buying Bitcoin in 2015 and I've yet to sell any. I did spend some time gambling on some altcoins, and I regret that back in the day. So I did lose some that way, but I've never sold any back to fiat, and I never plan to. As a matter of fact, I'm hoping that my grandkids will own my Bitcoin one day. But how can I effectively leverage that asset? And it's not anything new. I mean, we take loans against our real estate. We take loans against our stock. I can get a loan against my car if I want, et cetera. And so I'm utilizing that asset. So for example, I can take some of my Bitcoin. I could borrow against some of that. I could take that and put 10% down or 20% down on a piece of real estate, for example, depending on what your loan is. Recently, I was able to lock in a couple deals at 3% interest for 30 years. So you take 10 or 20% down. You borrow against. I did. I borrowed against the Bitcoin. I put it down on one of these other assets. I'm leveraging. In my case, multi-million-dollar assets for a small percentage down. Like I said, fixed, and now I've leveraged this asset at 3% interest for 30 years. And I think you just ask yourself a question: do you think inflation will be more than 3% over the next 30 years? Which, of course, I do. And now I've managed to do some really good deals where I'm making a really good amount of income on assets that I think are going to perform really, really well. And what happens is now these assets are producing a lot of income, and that income can pay the debt off on my Bitcoin, right, that I borrowed against. So not only does it pay off the debt, service the debt, not only does it pay off the debt that I borrowed on my Bitcoin, it also puts cash flow into my pocket on a monthly basis. I also have these assets that could, maybe go up in value over time, maybe not. I don't care about that, but it's a way that I leverage my Bitcoin. So now I have the dollar sitting in Bitcoin. And now I've pulled the dollar back out of Bitcoin. Now it's in this other asset and it's earning me yield over there. And as the money comes out of that, I could put it into another asset. And so that $1 is now doing 3 things. I think a lot of times people would ask, maybe people who haven't really thought through this, like in a Bitcoin standard, if everyone's holding Bitcoin and Bitcoin's always going up in value, why would anybody ever loan? Well, there's always going to be loans, just like there were before we got on the fiat standard. In the gold standard, there was loans as well. And so that's one way that I'm doing it. I think, obviously Michael Saylor has done it another way. Of course, Samson was just talking about, loans on the bond. So, for example, you could leverage your Bitcoin at a low interest rate, buy a bond and earn yield. So that's the overall principle. Of course, with leverage, I like to say leverage is kind of like fire. It can warm your house up, or it could burn your house down. So you always want to be careful with that, practice proper risk management. But hopefully that kind of answers your question.
Well, low leverage is okay. I think all real estate purchases are leveraged too, but people don't really think of it that way. But it's when you go 100x that's problematic, or even 20x.
Well, you need to be able to service the debt, right? So, for example, if I borrowed against this Bitcoin, now if I would have borrowed at an extremely high loan to value, let's say that I borrowed at 50% and the price of Bitcoin dropped by more than 50%, then I would potentially lose my Bitcoin or have some sort of a margin call. If I only borrow 10% against my Bitcoin, well, I feel pretty good that Bitcoin's not going to drop 90% from here. If it did drop by 90%, am I prepared to cover that? Do I have enough cash flow? Do I have, et cetera? And so everybody has to kind of think through their own risk analysis. Michael Saylor, he kind of started this famously, raising the debt to buy Bitcoin. And a lot of people think that was risky, but it's like his company throws off $30 million a year in free cash flow. Like, even if he lost all that, he has another 30 million at the end of the year. Like, so everybody's risk is a little bit different. Their tolerance is different. But yeah, ask yourself, at what level am I borrowing? Maybe it's not a good idea to borrow at 50% loan to value on Bitcoin, but maybe 10% is, and figure out where you're there. And then, like I said, worst case scenario, am I able to cover that debt? Let's say that I borrow that money and I put it into this asset, and the asset doesn't work out like I thought it would, and it doesn't produce the income. Can I still cover that debt in a worst case scenario, and just make sure you're protected?
So, Mark, how do you square the sort of borrowing against your Bitcoin with maintaining custody over your Bitcoin, right? So when you're doing that, you're basically handing over your Bitcoin to, I don't know, like
you are
BlockFi, right? So how do you think about that and the risks that are related to that?
Yeah, you're giving up custody, so there is no way to loan the asset and maintain custody. So that's a risk again that you're going to have to see if you're willing to make. Now, the way that I would look at it is, let's say, for example, I wanted to buy this other asset. I have two choices. One, I could sell my Bitcoin, which in that case I lose it, right? Then I pay the taxes on it. And so maybe depends on when you bought it and what your gains are, where you live. But let's just say that you're in a top income tax state and top tier, and I sell my Bitcoin and I'm taxed at 50%. So I would have to sell $200,000 of Bitcoin to get the $100,000 I need to put into this asset. Or I can keep the 200,000 in Bitcoin and borrow 100,000 against it. So I keep the Bitcoin and I now have the other asset. Now, the risk is on a custody basis. Let's say that they say that I'm not allowed to draw that back off the exchange again. Or let's say it's lost altogether. Let's say I give it to a shady exchange and I lose it. Well, I'm really in no worse of a situation than I would have been if I would have sold the Bitcoin. So that is a risk, sure. I started off my talk saying that I agree. I think that maybe the main attack vector will be on custody, but I don't think it's where they're going to seize it, like not another 1933 on gold. Probably more where you're just not able to pull it off the exchange. So that's kind of the attack vector I see. But like I said, I mean, I understand that's the risk. There is no way to really mitigate that other than not to do that at all. But like I said, I'm in no worse of a position than if I would have just sold it in the beginning. So it's got upside for me and less downside, and that's the risk I'm willing to take.
Do we still have Alex with us? Can you hear me, Alex?
I think Alex, when you disappeared more or less at the same time. We may be under attack from, Russian DDoS or something.
No, it's not the Russians that got me. It's the Americans.
Well, we're both back. Thank you.
Yeah, I'm all good. Can you guys?
Yeah, yes. Yeah, we just wanted to follow up on the question earlier. We were talking about, there's an article from a few years ago, The Rise of the Individual. Oh, can you hear me now, Alex?
Yago, can you guys hear me? Or Mark, or anyone?
Yeah, we hear you.
Yeah, we hear you loud and clear.
Okay. All right. Well, is there a question? Do you want me to riff on something?
They were asking about the.
Can you hear me now?
They were asking about the paper that you wrote, and if you wanted to kind of riff on that. You were talking about it before you cut out earlier.
I mean, I wrote it like, 3 years ago now, so it's been a while. So it's not really top of mind, but I guess the premise of the paper was this idea that as we evolve, the state will continue to break down, and the fact that we've got private property protected no longer by collective force but by mathematics, it changes the dynamics, and it's basically a sovereign individual-esque idea. Is we have formed institutions for the explicit purpose of protecting individual property rights, and those institutions, whether they are monarchies, churches, nation states, whatever, their original explicit purpose has always been roughly the same thing. It's to incentivize cooperation over plunder or over coercion. The problem is that as these institutions, or as these, because the thing is they start less as institutions, they start out as what can I call them, like emergent rules or observations or guidelines or philosophies or metas or something like that, we could call them. That's sort of where they start. But then as they institutionalize, then they decay, and then they actually turn into the very aggressor that they were trying to protect against. And here we are again in a world in which the institutions that emerged in the modern institution really emerged in the 1800s, I guess, maybe a little bit earlier. And, they emerged as a function of the desire to give more people a voice, or a framework for the middle class to rise up and collaborate. It's now transformed and devolved and deteriorated into one big clusterfuck whereby the incompetent rule over the competent and leech off them. So, yeah, I think Bitcoin is the next transformation. And what's interesting for me, it's like, idiots like Francis Fukuyama and everything like that wrote books about the so-called end of history with the fall of the Cold War. And to me, that is definitely not the fucking end of history. To me, the end of the cycle of history to date is actually Bitcoin. So for me, Bitcoin is the centerpiece of the longer timeline of humanity, which is really going to be separated by the Genesis block, and we'll have before Bitcoin on one side and after Bitcoin on the other side. And the early innings of the after Bitcoin phase are going to be messy as fuck, and we get to be the people who live during that period. And it may be a decade, it may be 5 decades, it may be 10 decades for us to get through the clusterfuck that is required to transition across from prior history onto a Bitcoin standard. But beyond that, I guess where I'm going with this brain fart is that post hyper Bitcoinized standard and post a couple iterations on that standard, society looks very, 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 very different, and particularly wealth and the most important form of private property beyond yourself, which is the product of your labor, its protection in the form of mathematics exceeds anything that's ever existed before, and that is a step change that is fundamentally different to the rules, the orders, and the institutions that have emerged in order for us to protect private property in the past, and to incentivize cooperation. So that's something I don't think anyone really grasps well. It's impossible for us to grasp well because we've grown up in a fundamentally different paradigm. All of us are kind of peering through the keyhole at a new dimension, and we're only seeing elements of that new dimension. And some of us have enough, imagination and, good enough sight to sort of put together some idea of what that new paradigm might look like. But I still think, as much as we can go back and forth amongst each other, like it is beyond current description in much the same way as probably the internet and the digital age is beyond the description of, Isaac Newton. So anyway, that's kind of my remarks at this point.
Mark and Alex.
Hoping that I wasn't talking to myself.
Mark and Alex, can you go a brief overview of your upcoming book, The Uncommunist Manifesto? And out of curiosity, do you actually mention Bitcoin in this book?
Yes. I just wanted to say Samson seemed like he had something to say before we dive into that.
I was just going to comment on something both you and Mark said, that you have property now that can be defended without... what was it again? Without
violence.
Collective force, I guess.
I said violence.
Yeah.
Okay. I still think for Bitcoin, you effectively defend Bitcoin by mining it. So if mining was stopped for some reason someday, then everyone would still have technically access, but with access and inability to move it by transacting, I still think it would not be very useful as an asset. So I think we still have to defend Bitcoin, and the defense of Bitcoin is through mining it. And it's sort of the way that Bitcoin stays alive.
Yeah, I
Samson,
agree. I mean, you can chase that down, right? So it's like, well, in order to defend mining, we still have to have electricity, so we have to defend electricity. In order to have miners, we have to have chips, and then chips need silicon, and we have to, yeah. So you can kind of keep chasing that down, But the same, I would also say, I saw someone from Gold say, well, Bitcoin isn't really safe because you have to have computers to transfer, like the miners have to process the transactions. Well, with gold, I mean, you still have to have transportation to move the gold too, right? So everything kind of has that, and you're absolutely right, Samson. We do need to protect the mining. It's one thing that I've actually we spent a whole night discussing this last weekend at the conference on confiscatable. If the mining becomes too concentrated by these publicly traded companies in the United States, and the United States then leans on them, like what happens? So it's definitely a concern and something to pay attention to.
Yeah, but I think you don't have to defend it necessarily with putting guns at mining facilities. You just have to decentralize it, and it's like what we're talking about. An over-concentration in one area is never good, and the lesson that we had there was with China, right? And that same thing could very well happen in the U.S. The form factor might be different because the U.S. approaches things differently. It would be death through over-regulation or heavy-handed regulation, but you could effectively achieve the same thing by driving people out or shutting them down. So I think the key here is to spread it out around the world.
Yeah, I think your point. Sorry, Yago, I was just going to say to Samson. I think when I'm referring to the private property rights being protected by cryptography and math, I'm talking more about someone's personal Bitcoin holdings, because yes, the Bitcoin network is defended through mining, et cetera, et cetera. But I think that's more of that's an externality of the incentive structure and the game of probability that miners participate in. They don't do it for the purpose of really defending the network. They do it as a function of the market dynamics and the incentive associated with that. So I think the defense in that dimension is more of an externality of the participation of those who wish to be in that game. But so I guess that's a little bit different, and that's closer to the existing paradigm. I guess I'm just sort of thinking more meta, in the sense that for me, owning a piece of real estate, for example, is dependent upon the title deed, and that title deed is dependent upon the promise of the state, and the state is dependent upon the promise of collective force, and that's kind of the angle I was thinking about.
Yeah, so I'm going to say something irritating, right? Aggressive now, to elicit some conversation, right? Is the fact that mining has become such an industrialized and relatively easy to identify activity, right? So I mean, we've all probably seen the meme picture of the police who raided a home because the snow had melted on its roof, and so they thought they were growing marijuana, and it turned out they were mining Bitcoin, right? But you can identify, and Maduro in Venezuela was doing this. He was identifying Bitcoin miners and confiscating their miners by their energy usage. So here's the thing I want to argue as the devil's advocate, because I want you guys to give your best responses, right? Is there a fundamental advantage to proof of stake in that it's not as easily identifiable, and it is easier to distribute sort of in a way which provides you security by obscurity?
No, totally not, because it starts from the wrong premise. Like, if you're going to, it's sort of like democracy or any other form, like socialism, communism. They start off from the wrong premise, which is, in order to get law and order and cooperation, we must give a monopoly on violence to a group of people who will over time transform into thugs. So like, if you're sitting on the wrong side of the fucking slippery slide, and the slippery slide is pointing to hell, then you're going to wind up there anyway. And that's the problem with proof of stake, is it fundamentally starts off with the wrong primitives. Like, the whole point of proof of work is that anybody can, without a stake, participate in the validation component of, or can participate in the game that I said earlier, that is the probabilistic game with the incentive structure that, you know, brings people in, which has the externality of securing the network. And the beauty of it is because those incentives are such, it doesn't matter how visible it is, because what it does is it's like an economic gravity well, which is it ties everyone's fucking incentives in. So to try and stop it requires energy, work, and effort. But what you're doing is you're swimming against the tide. So any state, any central authority that wants to do that actually has to expend continual power just to potentially have the opportunity to slow down or pause the network. And when they run out of real energy to do that with, the network just continues. So all of their energy, all of their effort is expended for fucking no reason. Whereas if they wanted to co-opt the proof of stake, network, you have a point of leverage. You go and speak to Vitalik and friends, or Hoskinson and friends. You know, you promise Vitalik the opportunity to lose his virginity, and he'll give you Ethereum. Like that's about as simple as it fucking gets. There's no energetic expense there. So they're in completely different fucking realms, and there's absolutely zero reason. Like, it almost reminds me of the Monero people who are trying to, duck, dodge, and hide with an inferior form of money to so-called beat the state, and they think that through privacy, just because they win one little battle, they lose the entire war. Like, Bitcoin wins the fucking war long term, and yeah, we'll go through a period where some of us, including Bitcoiners, including miners, including public figures, may at the individual level or at the smaller fractal level be sacrificed, but in doing so, the larger integrity of the network itself, continues. So yeah, it's not even an argument.
Well, Alex, in Vitalik's defense, I would say he's not interested in losing his virginity.
Well, you are right. Yeah. So maybe there's an easier way to do it. Maybe on the metaverse.
If you offered him a synthetic womb, maybe.
Yeah, I think that could be it. But I think fundamentally, proof of stake is broken on every single level. So there is no discussion to be had there. The entire premise of proof of stake is you try to make it as convoluted and complex to kind of hide the fact that it is broken. And somebody has to create that stake initially. So you end up with that slippery slope that Alex is talking about, which is you cannot create more stake to combat these negative externalities in the network. So if you take Bitcoin mining, for example, Bitmain was the dominant producer of mining hardware back in the day, but they can lose their dominance. It's possible for some other player to come up, and MicroBT was one of those players that did that. Intel is now looking like they're taking away market share. And I think Jack Dorsey is working on something. Blockstream is working on something. So you don't need to get a stake from someone to participate, right? The only way to get a piece of the stake to combat the negative forces is to buy it off of the bad guy, and then you inflate the cost of the entire pie. But for Bitcoin, you can add a new input. You can add a new hardware. You can set up new farms, and you can participate without having to deal with anyone. And yes, there is a cost, but there's a cost to proof of work, and that's the whole point, which is you need to buy the chips, make the miners, and set up an operation and consume energy. But it can be done. You can add more hash rate or new ASICs to the network.
So I see in the audience we have Michael, also known as Sovereign Mindset, and he has put together some tweet storms recently, which I found very interesting on this particular topic. Michael, if you want to request to speak, it'd be interesting to add you to this conversation, and then I think we can start adding other people as speakers to ask your questions of our illustrious panel of speakers.
Actually, I cut off Alex. You were going to ask him about his book, right? I want to be the one that took away the opportunity.
I can talk a little bit about that if you want. Would you guys like me to? Or?
Yeah, talk about it.
Yeah, go for it.
Okay, sweet. So yeah, me and well, I should use proper English. Mark and I, we got together. I think it was now in January, and the idea actually happened pretty quick. We kind of threw around this idea as like, hey, have you ever read the Communist Manifesto? And I was like, yeah, it's the dumbest fucking shit I've ever read. And Mark was like, yeah, it's one of those short books. We should do it like a book sprint and actually see if we can put something together that refutes these ideas. And I was like, yeah, that's a fucking great idea. So anyway, kind of like threw the idea around, and then the next month I was like, hey, let's just book this in and get it done. And we caught up in Austin actually in January, and just basically locked ourselves at an Airbnb for 4 or 5 days. Gave ourselves mild brain cancer reading Marx's doctrines in the Communist Manifesto, and just thought, how do we refute these ideas in a way that still is nice and short, it's digestible, readable in an hour, but really changes the axes of the arguments in the Communist Manifesto that lead to or that have led to the atrocities that we've seen in the modern world. And I think this sort of actually ties into a little bit of that discussion about like proof of stake versus proof of work, because like it's built on irrational or unsound principles in the first place, and then it goes awry. So like a couple of the things in the Communist Manifesto, like number one, it pits basically two arbitrarily defined groups, like the proletariat, which is the working class, and then the bourgeoisie, which is apparently the class who owns capital. And there's no definition of what capital is in the book, other than what is at the whim of the communist who decides to decree who has capital. But basically, the book states first and foremost that the entire history of humanity is the struggle between oppressor and oppressed, so two classes. And the modern incarnation of that in Marx's time in the 1850s is this rich bourgeoisie property owner or capital class versus the workers, and their relationship is merely one of oppression. And that's sort of one premise of their book, which is fundamentally false, and I'll explain why in a second. The other premise of the book is that the communism can be summed up in one sentence, which is the abolition of private property, which is another fucking absurd claim. That if you've got half a brain, you'll realize that the only thing that actually exists is private property or unclaimed property. Really, that's the only two things. But they use those two premises to basically put together this manifesto of garbling garbage, where they effectively, really what it is, it's just an academic, intellectual justification for behavioral entropy and being the worst version of yourself. They like make a academic excuse for being a lazy cunt who doesn't want to do anything, who is entitled to everyone else's shit just because they identify as part of a class that is supposedly oppressed by another arbitrarily defined class. So you've got this whole just mess. So what we did, like a couple of the differentiations in our book is, number one, we changed the axis of the struggle, and we said that the struggle is effectively between the autonomous individual and the coercive collective, because struggle is just a natural part of existence. Like, we struggle against obviously different groups. We struggle against fucking our employers, our employees. We struggle against our friends. We struggle against our family. We fucking struggle against ourselves. Like, Jesus Christ, like how many of us get pissed off at ourselves and pissed off at who we are and God knows what else. Like, you wake up in the morning and the night before you drank like a fucking retard, or you ate like a fat ass and you're pissed off at yourself. Like, so struggle always exists. It's not, just between some arbitrarily defined oppressor and oppressed. It is always there. So on that basis, like, really the struggle boils down to, and at least in a societal sense, it boils down to this, the struggle between choosing whether to cooperate with others in economic realm, which is the cooperative realm, which is the one where we, choose to be complementary and trade and, cooperate with each other, or the political realm, which is the coercive realm, which is the theft realm, which is the zero-sum game of you have something, I'm going to beat you over the head with it and take it. So Franz Oppenheimer calls, I think his name was Franz Oppenheimer, but he calls it the economic means to wealth and the political means to wealth. So that's like really the struggle, is choosing one or the other. And if you really boil it down, it's the autonomous individual versus the coercive collective. And then the other axis we decided to sort of shift, and our whole book could be summed up in a functional world requires the preservation of private property rights, not the abolition of. And what we're doing there is we actually we created we call it the real spectrum, which is everyone's always arguing politically about left and right and what's progressive ideas and conservative ideas and all this sort of shit. And we say that, look, that actually lives in the political realm, and we view a move of society back into the economic realm, wherein politics doesn't exist, or politics is bound by economic laws that are fixed. And in that realm, like, capitalism lives. And what we did was we defined capitalism as the emergent organic process that exists all of the time in every single system, everywhere. So capitalism fundamentally is the transformation of chaos into order. That's really what it is. We have just given it a political fucking flavor in modern times, trying to define shit like cronyism and colonialism and whatever else as capitalism, which is fundamentally false. Capitalism is something we all do. Like, it is the process of taking capital, which is material resources, time and energy, and transforming it into something of a higher degree of order that others may or may not find valuable, and as such, we keep that process going on. So capitalism is actually something that always exists. It exists in fucking communism. It's known as the black market. It exists in the cronyist states that we have today, like America and Australia and Canada and stuff like that. I would argue in those markets also the rawest version of capitalism is once again the black markets. But it's always there. So we kind of changed that axis, which is, capitalism is in the realm of independence, in the realm of freedom, in the realm of liberty, in the realm of the organic and emergent, versus politics is in the realm of the decree, fiat, top-down, authoritarian, political, etc. So they're kind of two crux points. I don't know if, Mark, you want to add to that, or if anyone's got any sort of initial questions.
Yeah, the only thing I would add to what Alex said, which was great. I mean, he summarized it really well. I think the main thing is just that this book for 175 years has moved the world in one direction that's proved to be disastrous. Hundreds of millions of people have been dead in its wake, and yet it still continues to live on. I mean, this is what the World Economic Forum is basically pushing, right? You'll own nothing and be happy, which Marx said communism is summed up in the abolition of private property. And I think if most people really took the time to understand what it said, they would realize how bad it is, but they haven't. And so we were just hoping that this book, we'd follow the same format, same 4 chapters, same approximate length. It's about a 45-minute read. We're hoping that it can really just enlighten a lot of people, shed the light on these ideas in a better way, kind of like Alex said, which is with Bitcoin being like this new emergent system, naturally occurring system. It's not apolitical, it's anti-political, brings the death to politics. And so, we just hope that it'll really kind of spread this idea, kind of like the original Communist Manifesto did. We're just launching a Kickstarter this week. We're going to have books printed. We're both speaking at the Bitcoin conference, Alex and I, and we're both going to be there signing books as well. And the website is uncommunist.com, and pretty simple, uncommunist.com. You can go check that out. And, all it takes is a minority to push these ideas and for it to gain a little bit of steam. And so that's what we're trying to do.
Does Bitcoin get a shout out in the Uncommunist Manifesto?
Oh, of course.
Yes,
yeah, of course. I mean, it's all coming from a Bitcoin lens. We talk about Bitcoin specifically, and we have a chart in there. So, recently Ted Cruz was talking about Elizabeth Warren, or he said like the liberals want to take away your ability to transact freely. And so then people are like, oh, it's turning into political, we can't let Bitcoin be co-opted by politics. And so we actually have a diagram in the book where we show politics is left or right, but it's on one side. And we say that Bitcoin is actually all the way on the other side, not in the left or right politics, but on its own kind of free market, emergent, organic system. So yeah, it's definitely Bitcoin backed.
Nice. Great to hear. And thanks for bearing with us with those technical issues earlier. So we're ready for the audience questions. We have a few people waiting to speak. Thanks for waiting, guys. John S., would you like to take the floor and go ahead and ask a question?
Hey, yo, what's up, guys? I didn't think you had me here. I was just going to add my 2-bit when you guys were discussing in terms of the industrial scale of Bitcoin mining and how to decentralize that. There's a lot in the narrative that's not discussed in terms of, Samson touched on this a little bit in terms of getting more companies and more mines involved. But I'm the founder of FutureBit, by the way. So what we do is we build Bitcoin miners that are accessible to as many people as possible. So we build these small Bitcoin miners anybody can run in their homes. So I'm just wondering what you guys think about in terms of shifting the narrative away from massive Bitcoin mines and taking it back of where Bitcoin started and how Bitcoin was originally, where pretty much everybody that had a laptop ran the whole system in one device, right? It was the Bitcoin miner, it was the wallet, it was the full node. And I think the big solution in what you guys are discussing is taking it back to that narrative and instead of having 1,000 massive mines controlling the majority of the Bitcoin hash rate, having millions of individual miners controlling the hash rate, and therefore decentralizing to the point where even governments can't touch that hash rate.
Well, I think the challenge is always going to be the cost of electricity. When you're trying to compete as an individual against big economies of scale, it's very tricky. And if you're mining at home, you're dealing with residential power costs, which are not going to be anywhere as competitive as industrial power costs. So from a strategy standpoint, I think it makes sense to try to get nation states to mine Bitcoin. And this is one of the parts, I think, of the El Salvador thing that people have sort of missed out, which is El Salvador is going to be mining Bitcoin, right? They have a small mining operation now, but it's going to scale up to the tune of $500 million. And you might have a concentration of miners in the U.S., but if you get a lot of nation states mining Bitcoin too, and they have a decently sized operation, it kind of offers, I guess, sort of deadlock, right? Like, yeah, maybe the U.S. might do something, but then like they'd be harming themselves because there's a number of countries in Latin America and maybe Africa and in Europe that are mining Bitcoin. So the network will continue, and all you're doing is shooting yourself in the foot. Similar to what China did, right? And there's actually still mining going on in China. People don't understand it. The big ones that raised their hand and said, we're really big and we're here and come regulate us, they're all gone now. But there's a lot of smaller operations that have flown under the radar that are still going. So it kind of shows that you can get some resiliency by being small and being nimble. And to, I guess, your other question about getting people to mine at home, we will have a subset of the Bitcoin population that does mine at home. And I think those people will be more driven by ideology. Like, I want to decentralize the network. I'm going to pay higher costs. I'm going to buy something from upstream or whatever, and I'm going to get the box and do that at home. But I don't think that's going to be mass market. I think what we'll end up seeing down the road is more people using hosting services, kind of like co-locating their server, where it's their machine and there's an SLA, and if the host is misbehaving, then they'll just move it to another host. But hopefully that kind of a service will become more commoditized. I think what you're doing, building something that people can run at home, is an important part of that puzzle. And I think there's another thing that we can get. I talked about this yesterday on another Spaces with Bitcoin Archive, but it's bringing back the block eruptors, the little USB miners, and having a mining pool that would pay out sats. So you could effectively mine with this block eruptor powered by USB, it's not going to take up a lot of electricity, but you'll get KYC-free sats paid over to you or streamed to you on the Lightning Network. And it's effectively the confluence of Lightning and mining. And if enough people are doing that, then we might get a significant amount of decentralization, or at least awareness of the need to decentralize the mining. So that's my thoughts on the subject.
I think one of the great things about Bitcoin mining and Bitcoin miners is that they really don't have that much influence over the Bitcoin system. So there is definitely a concern around having miners, like large industrial scale miners, I think are targets for being co-opted by governments. But once governments co-opt them, there's a limited set of things that they can do. Short of a 51% attack, if they, for example, were to try and enforce something like blacklisting addresses, the transactions to those addresses will simply be mined by a different miner who isn't in that country. Where it becomes more problematic is if all mining is industrialized and there was still sort of a Pax Americana world order where, you know, organizations like the Financial Action Task Force could set KYC laws for the entire world, then maybe everyone gets co-opted. But even in our world, before, you know, the crumbling of the U.S. hegemonic order, we still have, you know, pockets of freedom. So industrialized mining may be less of a concern than it would appear at face value. That said, you know, I think there is this dream that instead of competing on electricity, people would be able to compete by, you know, using miners in a relatively inefficient way, but for things that they would need to be spending electricity on anyway. So, for example, heating water or heating apartments, especially in cold climates, and also having access to effectively free electricity through solar power, which can be done much more easily on a small scale than on a large scale. And I think that becomes more available when miners, like Bitcoin mining hardware, stops improving at the very, very high rate that it is improving. You know, when we get down to about 3 nanometers, at that point, you know that your hardware is still going to be competitive in several years because we're simply not going to change paradigms, even in ASICs, that quickly. So I don't think it's as big as a problem as it looks like at face value. And hopefully, over the coming years, as we get closer to 3 nanometers, it becomes possible to start selling commercially available things which aren't competing on electricity price, but rather on electricity use.
Yeah, we'll definitely have some fun stuff to announce around that soon. So it should be interesting in the next few years for sure in Bitcoin mining.
All right, thanks for the question, John. Power, all caps. Can you give us your question? Go ahead and unmute.
Hey, what's going on? Thanks for letting me ask a question. Yeah, I just wanted to ask a question about that whole theory with Ray Dalio, the changing of the global world order. Do you guys think that the United States is on decline and we're going to see another world superpower? Because, you know, the United States has seen this growth through the stock market over the last 100 years, right? And we're at all-time highs. So I wanted to ask, do you guys think the United States is on its way out?
Yeah, that's a simple, as Samson said, it's a simple yes. If you've read that book, I'm actually reading it now. I'm like halfway through it. If you've read that book, then I think it already answers your question, right? So wealth isn't money. You mentioned the U.S. having the wealth in the stock market. Wealth isn't money, right? Goods and services are money. So he breaks down the 8 characteristics of a nation, and he talks about it starts with education. Then a good education leads to good product development, goods and services being produced. Goods and services being produced leads to strong exports. Strong exports leads to then good trade balances. Good trade balances lead to then strong military. And so you said it. All we have is financial economy, right? We don't produce goods and services anymore. So it's a breakdown from the education system, no goods and services. And so instead of having money flow into the country, we're debtors, right? And so if you've read the book, then you've already answered the question. And then it's pretty obvious to see as well. And Samson gave it a simple yes. And I would agree.
I would actually, Samson, if you want to go quickly first, then I'm going to put my unpopular opinion in.
Sure. I think it was you, Alex, that was talking about systems that kind of become overly bureaucratic or too complex, and I think that's really what it is. Like when a nation develops, there comes a point at which everything kind of just becomes a bureaucratic machine, and it's not really interested in growth anymore. It's more interested in protectionism and putting more regulation into place. And when these things kind of keep stacking on top of each other, it just snowballs, and you ossify effectively, and you start shrinking. Like everything starts retracting and basically decaying. What was my point again? Sorry, I'm trying to do something else at the same time. But yeah, I think at the end of the day, like the U.S. is declining, and yeah, I remember the other point. You're saying the stock market's up, but that's more a function of inflation than anything else. If you look at the money printing and you look at the stock market, it is correlated. So the stock market doesn't really indicate growth or health of the economy in any way. It's really just what can you do, what can you accomplish, how open is a country to business, and you just see this in developed nations where it just becomes very adverse to new business. And then you have other things like El Salvador, other countries like El Salvador, which are trying to grow and they're being receptive to business. And if you take some of the Asian tigers as examples, like Singapore, Hong Kong, Korea, like they had periods of massive growth, and that was when capital was free flowing, freely moving, and people are investing. And it's not yet reached that super orderly pinnacle where they're trying to protect what they've got. They're open to growth. There's a mixture of order and chaos, and over time that's just lost, and you have an overweight orderly component of things, and then you don't have that growth anymore. So I think Latin America is probably the next place for growth because they're effectively like a startup. And if you can move quickly as a startup and you can bring those legal frameworks and you can create, say, Bitcoin City, which is completely open for business, you're going to draw in that capital, draw in that investment. Whereas in the U.S., they're going to want to see where did that $600 come from. You know, they're trying to extract every penny they can from the current system instead of growing the current system. That's my 2 cents.
Yeah, very, very accurate. I want to extend on the chaos order pieces. Like what happens as these bureaucracies move into the state of protectionism is that they become static, and when they're static, they can't adapt and evolve. Like for a system to continue to grow, it needs to be dynamic. So there needs to be it needs to exist at this nexus of chaos and order. But the thing about Dalio's book is that all he does is he projects the current paradigm and past paradigm, which we're still living in, and he projects it forward. So this idea that China is the next fucking big superpower, I actually think is moronic. He's just there protecting his own interest. But the what countries like China are doing is that they're built on false principles in the first place. Now, yes, they have the benefit of being growing emergent nations. They are a little bit more dynamic by virtue of the fact that they're a net producer, but there's a saying in the first Blade movie, I think, or it could be the second Blade movie with Wesley Snipes. It says, "Motherfuckers always be trying to skate uphill," and that's what countries like China are doing. Is that they're built on false premises in the first place. So this idea that there's going to be a new superpower that is centrally fucking managed and operated in the future is laughable. Like there is no large-scale global fucking superpower in the future. So newsflash, these entities, these large-scale bureaucratic, centrally managed, centrally operated entities are economically infeasible. They do not exist as Bitcoin emerges. Bitcoin breaks them down, and they either fragment by virtue of adapting consciously around Bitcoin, so they fragment into more city-state-like things, or they break and they fragment under Bitcoin's gravity well. So there is no, this idea that I actually personally think Dalio is a fucking moron. All he's done is read some other people's history books and he's slapped it together into a book, and he's pointed out the quite obvious idea that, many other better authors before him have pointed out, which is the fact that things decay as they get more institutionalized. And yes, whilst that is happening with the US, it actually has an edge in the fact that it is built on sounder principles than the Chinese economy. And in fact, China literally only grew because there is such a desire for consumption in the West. And as that actually falls apart, and I mean, China's also got some other problems, which are demographic problems, and that's a fucking huge ticking time bomb that's going to hit them, very soon. But you've got these sort of multiple dimensions that are that run against the natural grain of evolution that is going to leave them with their pants down as the juggernaut that is America actually starts to fall apart. Because in that sense, he's accurate. But as America starts to fall apart, everyone else gets rug pulled. And this idea of a centralized globalist state or large-scale nation states, period, they all start to fall apart. And you have the emergence of smaller territories. And this is why sort of places like, I would say the Balkans in Europe and the Balkans of South and Central America are interesting, is because they are still in a place of dynamic, emergent sort of chaos, but they're small enough to actually organize and move in a particular direction and adapt, as opposed to these large-scale fucking nation states with 300 million or 1 billion people. But those ones are NGMI, hands down.
Yeah, that's good. I'll add something, and I got to drop. I have another meeting to run to. But in the case of China, it's falling into the same rut as I would say Hong Kong and other places, where they're moving towards the phase of the economy where it's focused on extraction of value from the economy itself, right? It's about regulation and taxation. And when that happens, typically, the scales are tipping in the other direction, and it's going to move to decline. The only way is to go pure capitalism and embracing sound money. So if you want a rule of thumb or a litmus test, it's whoever's building a CBDC, they're NGMI and they're going downhill. Whoever's embracing Bitcoin, those are probably going to be, economic superpowers. But the other thing to factor here is the nature of warfare has changed too. So historically, you're a superpower if you have a big army and you have a big military presence. But an interesting thing that we're seeing play out now is that doesn't mean that much these days, because drone warfare has changed the nature of the game. So you can see Ukraine is able to defend quite well using drone technology. So it doesn't matter if you have tons of tanks, they can hit the supply lines and cut you off. And if you can't feed your army, then, well, you're SOL. So I think the whole geopolitical landscape, what it means to be a superpower, all of these things are being redefined by technology. If not Bitcoin, then by drone warfare. So maybe we'll never see these massive, huge superpowers anymore. And I think that's a good thing for humanity, where you can, break up countries and have smaller nation states. And I think that will be a better thing for us in the long run, because it's difficult to have that level of cohesion and different lines of thinking when a country is so big. And you could say like Canada.
It's impossible.
Yeah, it's impossible.
Actually impossible. Yeah.
Like if you're scared of the world, scared of the virus, you move to that country next door and you go and live your life there, masked up forever, and let other people live their lives out. But if you have to follow one rule set for such a big land mass and such a distributed population, it's just not sustainable, I think.
It never will be, and it's not only not sustainable, it's completely economically non-feasible, because the only way to keep the cohesion is to fund yourself fraudulently. So all of these large-scale nation states, what's the one thing they share in common? They're all bankrupt. And they're only remaining in business because they can forcefully steal your money. They can borrow from a fucking future that doesn't exist yet, that someone else is going to pay for, or they can print their way into it. It's just fucking, all of that goes out the window.
Yeah. Also, smaller thing, more competition, and competition.
Yeah, exactly. Competition is how we correct. It's how we progress. Yeah, totally.
Yeah. And I gotta drop off. It's been good, guys.
Okay,
Thanks a lot.
See you, Samson.
See you, Samson. Thanks, bro.
Cheers, Samson.
All right, guys. So let's get one more question in here. Do you have time for one more?
I just wanted to add one. I just want to add one more piece to that, back to China and just kind of this whole thing is that, China has really been able to kind of come alive because one, they opened up their economies a little bit, so they added a little bit of capitalism in the '80s, which has really sprung them forward. So these centrally planned, overly centrally controlled economies don't do good. In addition, because of their censorship, right? I mean, they have the Great Firewall of China, the social credit score system. They really prevent free open communication. And so with that, without the free and open communication, they don't have the creativity happening. And so they're not really inventing stuff. That's why China's really come alive, because they've been able to take the IP, intellectual property, from the United States. They can't really produce it on their own. So that's a problem with China, but it's also a problem, as Alex has been highlighting, with the larger these nation states get, the more they try to control things, the more they stifle innovation, and then that leads to their decline. But yeah, sorry, go ahead and open up the questions, and then I got to bounce too.
All right, no worries. Yeah, let's get Joby. Go ahead and unmute yourself. Joby Dor.
Hey, thanks. Can you hear me okay?
Yep.
Okay, I don't know if this is strictly relevant to the exact nature of the current conversation. I started listening in when homeboy, I can't remember the Kiwi, and I can't remember his name, I'm sorry, and Mark were co-authoring this book. Alex, I'm so sorry. And I had something to offer in that regard. Would it be all right if I did that? If not, I totally understand.
Go ahead and shoot.
Okay. I'm on board with you 100%. I call myself a left market anarchist myself, so there's no particular critique in your general thesis. I kind of just wanted to present a talking point, certainly not expecting you to rewrite your whole book on my behalf. I would offer that capitalism does have a specific definition. It's the privatized ownership of the means of production. And from that standpoint, I would offer that maybe it's not so much who is manufacturing the goods and services or how they're being exchanged, but it's more where they are being exchanged. And from that standpoint, I think the salient matter is markets more than capitalism. Rather than capitalism for all, it's free markets for all. If we look at small neighborhood groups or small family units, affinity groups that have close ties and high trust value, those exchanges might start looking something a lot like communism, whereas the further out from those nexus points that we go, the trust value decreases, and so we might need something that would approach or resemble something more like capitalism. And so it's not so much the means of production that's at question, but the place of exchange. Does that make sense?
Yeah, it makes sense. And what I would do is I would just like slightly reframe your thinking a little bit, just in this sense, is that what you're describing there is more so the political lens or the political definition of capitalism more so as a system. I'm talking about capitalism as a process. So even in the discussion, or even the example that you gave of like a little, smaller commune where there's higher trust between people, and let's say someone is like, baking cookies and someone else is milking the cows and all that sort of stuff. They are actually still engaged in the process of capitalism, because what they're doing is they're performing work, and they're transforming ingredients, and those ingredients being time, energy, and natural resources into something of a higher order. And they're only valuable insofar as they've gone through the process of taking that capital and transforming it into something of higher order or of need within the high trust networks that they're in. So, like, I would say that capitalism has existed. Capitalism even exists in the realm of biology. It's like, biology selects and adapts based on certain forcing functions, at that layer, and it takes resources, energy, and time, and it transforms it into something of higher order. So that's that there is, and this is a novel viewpoint. Like, I haven't really seen this explored too much, but this idea of like the meta nature of capitalism as a process, and not as a political system or as a system of order amongst people. And maybe capitalism with a capital C as a system of order, etc. Is something that manifests at larger scales and is necessary at smaller scales. We have more of a commune, but still we still engage in the process of capitalism at the micro, irrespective of the model of the kinds of interactions we're a part of at the scale of corporation. So that's what I would venture you to think on.
I appreciate that a lot. I'll offer one more thing and then I'll step down, and it'll be pretty quick.
Please do.
And I'm not just trying to be argumentative. I'm just, maybe posing some food for thought, for yourself or anybody that would be listening. I would reframe my thinking and then offer another reframing, which is that maybe it's not capitalism so much that we're talking about, but the exchange of capital. Because capitalism, in the sense that it comes with so much historical baggage, I find it an almost insurmountable challenge to try and divest people from that political definition, and the reframing that you're pointing at, which is a reframing that I agree with. It's just that, maybe it's just a function or problem with marketing. But the essence is that it's maybe not so much capitalism. It is that we are exchanging capital. And to the degree that we are able to exchange that capital in as free a market as possible, we are then protected and safe from those political shenanigans that you and I definitely would both agree on. And with that, I'll step down. Thank you.
Yeah, it's a tough one, and it is a big branding campaign. I think me and Mark chose to spearhead that one and say, hey, like, we need to claim that word back, because it is really unfortunate, because like what you're describing there, this exchange of capital and this transformation of capital, which we're all engaged in. I mean, cavemen were engaged in that shit. You know what I mean? They would go out and someone would pick the berries and someone would kill the the animal, etc. And that is a form of capitalism. But it's like you said, it's been tarnished, or the word's been co-opted, and it comes with a whole lot of baggage. But I guess it's our duty to kind of to dismantle that. I don't know. I'm a definitions maximalist. So this is why we put a bunch of definitions in the beginning of the book. But anyway, I agree with your.
Yeah, and I want to say just real quick. I mean, I'm actually. I mean, I had kind of abandoned the word capitalism as well, because it's got this dirty connotation, to your point, and I've started to use the word like free markets instead. However, as Alex said, right, we're trying to reclaim that word, and so I think we spent 25 pages in the beginning of the book just with new definitions to like really clarify these definitions. The other thing to understand with capitalism is it's not just private use of capital; it's also protection of private property rights, and it's also free and voluntary exchange. And so what happens, people co-opt capitalism to say it's cronyism, it's led to slavery, but slavery doesn't have free and voluntary exchange. And so if you remove some of the definitions, you get that. But anyway, we're trying to reclaim that word. For those of you guys just listening.
Okay, guys, we have Annie. She's been waiting a while. Do you want to ask your question, Annie?
Well, actually, this is Annie and her husband, and I actually wanted to speak with Samson Mow, but I understand he's gone. But he was talking about the possibility of for lack of a better term, a HELOC on your Bitcoin, and in terms of Bitcoin being property, there's a lot of talk of smart contracts, not just with obviously the other DeFi, the other Ethereum-based sort of currencies, but I guess there's even talk of having a type of not a side chain, but a methodology through stacks done by Munib Ali to also have a type of a potential smart contract. I particularly believe that smart contracts are overhyped, and I don't see how they could work, especially the oracles that could actually, determine specific matters, especially if you were to try to make an interaction of, let's say, buying a house with Bitcoin and not have a third party, such as an escrow company or something. I'm just curious what any of you might think. I wanted to get Samson's opinion, but hopefully you all might have a particular opinion on that, and whether you think it's feasible or whether it's just a more or less hype.
So I have strong opinions on this. I've been working tirelessly for a while now to develop more advanced smart contracts for Bitcoin, and that's what Sovryn is all about. Sovryn is a extension to the Bitcoin protocol that allows for effectively any type of smart contract to be written and secured by Bitcoin and use Bitcoin as the native asset. I think that there's some clear ways in which we can use smart contracts already today, and you can use Sovryn, for example, to lend and to borrow, to trade, to create and use Bitcoin-backed stablecoins, and all of this can be done without intermediaries, which makes it a very powerful tool in creating additional layers of decentralization and defense in depth for Bitcoin. With regards to things like a HELOC, you can definitely do that. You can, without having to give up custody and control of your keys, you can borrow against your Bitcoin and effectively never have to sell your Bitcoin ever again. And the more advanced use cases that you discuss are also being developed, and some of them can be done without any, so for example, right now Sovryn doesn't require any recourse to oracles for any of the use cases that I've just described, but even things like real estate, you can construct ways to manage that without oracles. Although, of course, once you start dealing with property that is physical, you need to start having much more complicated constructions. But I overall think that what we're basically involved in here is rewriting the very paradigm of how we conceptualize property, and what and instead of having property managed by governments, we'll have property managed by the highest court ultimately, which is Bitcoin.
Well, that sounds, it sounds really interesting in theory. I guess my issue is that when you're talking about smart contracts, especially so many aspects, I'm just in property. There are so many different disclosures and requirements, and I guess the biggest thing is trust. For instance, Samson Mow was discussing earlier the idea that if you did want to get a loan on your Bitcoin, you would have to relinquish your Bitcoin. And somebody else, and he said, of course, it would be dangerous, but theoretically, you would be risking the same thing as if you were to just sell your Bitcoin. I actually don't quite understand that, but it kind of makes sense. But if you were doing a smart contract, you would still be relinquishing your Bitcoin. And boy, I tell you, there's been a lot of, an incredible amount of theft of late for people that engaged in smart contracts thinking that their money was actually safe. You believe that at some point it'll be, for instance, would you risk your money on something like that?
So I have quite a lot of Bitcoin, which I'm using on Sovryn, as do a whole bunch of other people. There's a protocol currently being written using Sovryn, which is called Zero, and it actually already works, but is still in sort of like pre-alpha. And the way it works is you lock up your Bitcoin in a type of contract which is being referred to as a line of credit contract, and you lose access to your Bitcoin, but no one else gains access to Bitcoin. So it's locked up in your line of credit. It's effectively a smart contract that is created by you and for you only. And against that, the system will issue for you dollar-denominated stablecoin. So now you can go and spend those stablecoin. You've given up your Bitcoin to nobody, and you can do this at 0% interest rate. So you don't even have a cost of carry that you need to worry about. The way you then unlock that Bitcoin is by paying back the loan. And if Bitcoin continues to rise in value, you don't even need to do that. So, if Bitcoin goes up another 10x from there, you could choose, for example, to unlock 90% of your Bitcoin and leave the last 10% still locked up. So there's definitely ways to do this, and really the only limitations are human creativity.
I'm not sure what happened. Sorry, I'm not hearing you.
I stopped speaking. I don't know if you guys heard my response.
Oh, sorry about that. Okay. Okay.
Cut off right at the end there.
That sounds certainly, in theory, it sounds really good, but my big issue is if the system doesn't work and locks up, who do you sue?
You don't sue anyone. Why would you want to sue anyone?
So you just lose.
That's
so you
correct.
just lose it, basically.
If you lose the private key to your Bitcoin, you just lose. You don't have anyone to sue.
I understand that concept, but it's just I guess that I think that would be an incredible thing, and I guess it would have to be tested for many, many years, and probably using different types of how should I say Twitter or other methods for people to say whether they're satisfied with it or not. But I still, my feeling on that is I still don't understand how one could really trust that specific aspect of it, unless you're saying it's part of, it's just as trustworthy as having your private, keeping your private key private. Is that what you're saying?
No, it's got, anytime you're doing anything which is, just like Lightning Network has different security assurances than Bitcoin main chain transactions. So smart contracts also have different security assurances. So, you're taking on at very minimum different risks, if not more risks. But, your skepticism is warranted. It's not a question so much of trust as it is of verify. But the beauty of open source code is that it can be verified by anyone, and projects like this tend to attract a lot of people who are looking to break them. And so, these systems can be built very, very robustly and can harden very, very quickly. But yeah, I think it's not a good idea to blindly put your money, to degen into all kinds of things that you don't understand, especially not with the most valuable asset that you could possibly own, which is Bitcoin. So if this is interesting to you, I would, say, pay attention. Don't trust, verify in whatever way you can. That might be through Twitter, or it might be through reading the code itself. But there's no doubt in my mind that even if this particular protocol 0 doesn't, for whatever reason, work out, it's not just theoretically possible. This is a practical thing, which is coming very, very soon to Bitcoin.
Are you using the Stacks protocol, or is this is some totally different protocol that you're using?
No, Sovryn uses a number of different layer 2 protocols and is fairly agnostic as to which Bitcoin layer 2 protocols it uses. So, for example, it's integrated with Lightning Network, and smart contracts are written on a sidechain called Rootstock. I think that is a much better way of representing and securing smart contracts with Bitcoin, because Bitcoin is the native asset. It's secured by Bitcoin proof of work. The transaction fees are paid in Bitcoin to Bitcoin miners, and so I think Stacks is very, very interesting, but to my mind is a little bit more of like a planet that orbits Bitcoin rather than a true extension of Bitcoin.
Thank you so much. Hopefully there's some more speakers. I'll relinquish any time I had, but thank you. That was a very lengthy conversation. I appreciate your time.
My pleasure.
All right, Annie. All right, we have Space. What is it, Space Honk? Would you like to speak? Go ahead and unmute yourself.
Yeah, hi everyone. Very glad to be here. It's really amazing to listen to these amazing conversation and witness the future in the making. My question is regarding sovereign and similar protocols redundancy or like resilience. In the sense, how do we ensure that, or perhaps I'm understanding this wrong, but like how do we ensure that I have access to Sovryn's apps? Like, you know, okay, I run a Bitcoin node, etc. But is there like, or should we run Sovryn node, or can anybody run a node, and should I?
Yes, so there's lots of different ways that decentralization, you know, I think is something that needs to be done in layers, and self-sovereignty is sort of a ladder. One of the cool things about Sovryn is the way it's constructed is when you first sort of log into sovryn.app and use the app, it downloads that app client side. And so even if the server were to disappear, you would still be able to actually use it because it's like you've downloaded it to your computer. And it does this behind the scenes. It also connects directly via your hardware wallet. However, you would lose the ability to read if you didn't have a node that you were able to either, to connect to. So there are public nodes that you can connect to. You can also run your own node. And, you know, obviously that's the most sovereign way to use the system. But it's probably beyond what most people will do. And sort of one of the design philosophies that the community talk about a lot is that it needs to be designed like we should be designing systems in a way that makes it so that you don't have to be technical to be free. So, you know, you can connect via Tor, you can use your own hardware wallet, so you don't have to use like a web wallet or anything like that. And it downloads to your computer, and you can use basically any public node.
Okay. But the thing is, I haven't seen any way to. So you were saying that as soon as I log into the app, like on a web browser, there's something going on in the background. Like, I don't really get that. I'm pretty sure nothing is being downloaded on my computer.
No, it's downloaded client-side actually into the cache of your browser. So you could actually experiment with this. You can turn off your internet and navigate to live.sovryn.app, and it will still come up even though it's not connected to anything, because you're not actually pinging the server. It's one of the annoying things about it also, because every single time there's any change, it asks you to upgrade, because like it doesn't upgrade automatically. Like a website, you know, just changes, and next time you navigate to the website, you'll see the new website. But here you actually have to manually sort of upgrade it because it's running on your machine.
Okay, thanks. So just to finalize on that question, let's say, what would be the downsides or the risks of not running a node? Because if I understood well, there's a possibility of doing that.
The biggest risk, sort of the most common risk, is that you just lose access to the app. You know, so you wouldn't be able to change positions or interact with the smart contracts. And you wouldn't lose any of your funds, but you wouldn't be able to interact with the smart contracts. There's a potential for a Sybil attack, but that's, you know, if someone convinces you that they're a node but they're not. But that's what blockchains are for, right? You look at the heaviest chain, and you know, that's what the system automatically will do for you, is will look for the heaviest chain to avoid a Sybil attack. So you know, you get the highest level of assurance if you're running your own node, but in practical terms, it's basically not necessary.
Okay. Thanks a lot. Thanks a lot, Edan, and the Sovryn guys. I appreciate everything that you do.
All right, thank you, Space Hawk.
I got to run. Thank you for putting this on, and yeah, we'll be in touch.
Thanks very much.
Thanks very much, Alex.
Peace.
Thank you to Alex for joining us. And let's see, K9 crew, can you hear us? Feel free to unmute yourself if you can.
Hello, everyone. Just want to really quickly thank you guys for hosting this space. A huge thank you to Sovryn for creating a mobile app, because I live a lot of my degen Bitcoin crypto life through my mobile phone. I don't always have access to a desktop. So the fact that they created a mobile app is wonderful. I can't wait to give it a try. Thank you for that. My question is, generally, when I listen to different spaces regarding Bitcoin, a big issue usually always is energy, right? Energy consumption, electricity, paying some third party or whoever for the cost of electricity, the cost of it, the cost of running a node. I always hear that in different spaces. I've never heard, and I'm sure it has occurred, I just haven't been in a lot of spaces where it's discussed, but why aren't there different sources of energy, either one that can create electricity or a source of energy in and of itself that can power a miner? So I know everyone is looking towards what the mainstream is giving you, which is like 5G, electricity through wind power or sun or whatever the case is, but those aren't proliferating as much. I'm sure in some countries, I think China has like some big, huge solar farm that they use, but I don't see a lot of that being applied to mining Bitcoin and so I was just wondering what other energy sources are available that can that don't require a ton of things. I'm not an engineer, I'm not a computer person, I'm not a miner. I'm just I like crypto and I like what Bitcoin stands for and why it was created. But why, or has anyone, or is there a company or a corporation
Bitcoin is one of, if not the greenest, large-scale industrial industry in the world in terms of the percentage of non-carbon emitting energy that is utilized in the mining process. So the majority, right, something between 60 and 80% of Bitcoin is mined in a non-carbon emitting way. The primary source of energy for Bitcoin mining is hydroelectric. And the reason that hydroelectric is so popular is because it's cheap, and there are very few other industries that can use hydroelectric as easily as Bitcoin, because Bitcoin miners can be placed anywhere, whereas hydroelectric energy is very frequently available in distant or difficult to access places. So for example, El Salvador, volcano mining, that's hydroelectric, right? It's water heated by a volcano, not useful if it's not next to a population center, yet useful for Bitcoin. In addition to that, solar is utilized, but even more popular than solar is gas flaring. So in the production of both petroleum and natural gas, they flare excess gas, which they can't properly distribute. Instead of flaring it, they can now utilize it for the production of energy, which can be used with Bitcoin miners, and that's because Bitcoin miners are extremely transportable. You can load up a container shipping, like a shipping container, take it to wherever the gas needs to be flared, and instead of flaring, you utilize that for energy production. So in terms of large-scale industrial processes, there's probably no industry, I certainly am unaware of any industry which is as green as Bitcoin.
I thought so. Thank you very much for your response. And my second question, I do have more questions, comments regarding that, but I don't have the resources with me to share. I was wondering I don't work for, I'm not an ambassador or anything, but there is a crypto web 3.0 system that's being developed and or being used presently that does not use the same programming components as, say, AWS or, Web 2.0 or the present system. The name of it, I think, is Nexus.io, and how it is composed, I thought, was revolutionary. Can Bitcoin mining transactions and all the functions of the Bitcoin system be scaled to accommodate or be accommodated by such a system? So it's created to help prevent and I guess be in opposition to quantum computers that they say will soon be able to disassemble a Bitcoin wallet without even
so that's not likely. So the Bitcoin the cryptography utilized in Bitcoin, specifically elliptical curve cryptography, is what's known as quantum hard. So quantum computers would not provide exponential gains in the ability to generate hashes, which would allow people to, for example, try to find a collision, which means be able to figure out what your private key is. So Bitcoin is quite safe from our current view of what quantum computing would do. That said, in the future, it may be necessary to change the cryptography behind Bitcoin. And in many ways, this is already happening. So if you think about what Taproot represents with Schnorr signatures, it's effectively a new type of cryptography which is being implemented for the purpose of Bitcoin transactions and creating Bitcoin addresses or UTXOs. So nothing like Nexus is necessary, and in fact it would be complete overkill in terms of you want to keep Bitcoin as simple as possible, but quantum computing is not at this point a major concern, and I don't think would ever become a major concern because it's easy enough to introduce new cryptography to Bitcoin. I think I'm going to have to head out, so I'm going to hand this back to you, Magnus.
Yes, thank you so much for your question, K9 Crew. It's quite apt you mentioned the Sovryn mobile wallet app. Folks, don't forget that the Sovryn Mayhem is still happening. So right now we are giving away 300 SOV for the best feedback about the mobile wallet app prototype that's being built right now. Just head to our Twitter, retweet us, and follow the link to give your feedback on the Sovryn forum. So super easy and fun stuff. Also just want to give a big thank you to our guests today. We had Samson Mow, Alex Svetski, Mark Moss, EdanYago. Thank you all very much for joining us. Make sure you follow them and also us at Sovryn BTC if you get a chance. And thanks for the time, everyone. Hope you found it interesting, and thank you very much. And remember to stay sovereign.
Stay sovereign, everyone.
Have a great one. Bye.